Hello there. Welcome back to Level Accounting. This video, we want to look at the preparation of the income statement of partnerships. So we've got a question that we have here, which is our question 4, and it's on partnerships. That is on financial statements. Remember, we are going to look at income statement. The income statement becomes one of the financial statements. So our question reads: You are provided with information taken from the financial records of Bandile and Sons, a retail store in Pietermaritzburg. Financial year ended on 20th February 2018. A markup of 14% is estimated at all times. So when you're given a markup, we know that we are going to include it in the formula that says our cost price plus our markup will give us our selling price. So we have to take note of that as we go through the question. So on the credit part, we are only going to look at 4.1, which reads complete income statement for the year ended 20th February 2018, and it is 48 marks. So going down to the information that you are given in the question, you see that you are given the information here, whereby you are given the extract from the pre-adjustment trial balance on 20th February 2018, and you're given a list of balances, and inside the list of balances, we're having the balance sheet accounts, and then we've got the nominal accounts. So going down, we'll see that you need to go through these balances and other additional information that are given in the question. So if you come here, you've got adjustments in additional information, whereby it's ranging from additional information 1, which is A, going down to a J. So this marks the end of our question. So having this now, we can now go to our answer section and try to see as presented in answer book. This is our partnership financial statements. That is income statement for the year ended 20th February 2018. And then the first figure that we're going to start with is our sales. So we're going to pick our sales in the list of balances and try to see if we've got any adjustments that needs to be done on the sales figure that we can adjust so that we can put the net figure. Remember, we've got our returns, sales returns, or our debtors allowances. They are going to reduce the figure for sales. And if you've got any other adjustment that we have with the additional information, also we need to adjust to the figure for sales so that we put the net figure. So we are having sales of 9,472,000. Then if you go down, you see that we've got also debtors allowances here. They are going to reduce this figure. So we're going to subtract them from our sales figure, and then we put the net figure. So before we transfer the calculation, we also need to confirm in the additional information if you've got anything that is affecting our sales. You need to go every information that is given in the additional information to try to see if you've got anything that is affecting your sales. But if you come to the first adjustment saying a credit note for 1,680 issued to your data on 26 February 2018 was inadvertently omitted from the relevant journal. So with a credit note, we know that whenever there is a credit note, it is issued when there are our sales returns, or we could just call them the debtors allowances. So this is what we have. So it means we have gotten an additional debtors allowance that is there of 1,680 that we need to subtract from the figure for sales. But we know that whenever there are returns, they are also going to affect our cost of sales, because the goods that are being retained are supposed to go to closing stock figure, and then if they go to closing stock figure, they are also going to reduce the figure for cost of sales. So we are going to calculate also the proportion of cost price of this figure that we're having. Remember, this figure that we're having represents the selling price. So we need the cost price so that we can adjust now in the closing stock, and then we adjust for cost of sales. So basically, it's going to reduce the cost of sales. So whenever we're having a credit note being issued, additional sales returns that are there in the form of a credit note, we are going to subtract on sales and we subtract again on cost of sales. So, but on cost of sales, we'll be subtracting at cost price. Then other sales is subtracted using this selling price. So we are going to make our calculation by saying, when are calculating the net figure for our sales, we are going to say our sales that we are given here, which is 9,472,000. We subtract the debtors allowance figure that we have 70,000. Then we subtract the additional allowance that we have in the additional information of 1,680. So we can go to our answer section. So we are here. So in brackets, we can just summarize the wicked, whereby we are saying the figure we are given in the list of balances for sales is 90,472,000. And then we subtract the figure for debtors allowance given in the list of balances, 70,000. Then we subtract again additional debtors allowances that we are given in the information, you've got 1,680,000. So calculate it as such, you're going to get a figure for 9,400,320. And then we have got cost of sales. So for cost of sales, we are saying we are also going to calculate the proportion of cost of sales in the figure that we have there. For cost of sales, we are saying here this is our selling price. Remember, we said at the beginning of the question, we can just try to refer back. We are given a markup of 40%. And we know that our cost price is always 100%. Then add our markup of 40%, you get your selling price of 140%. So in other words, we are saying the 140% represents the selling price. So we are saying, and this 1,680 is the selling price. We are saying selling price is equal to 1,680. So the figure that we want is cost price, which is our 100%. So basically, we can just maybe try to represent it in a proportional way, whereby we are saying this is our 140%, and the figure that we are looking for is 100%. So we just put a question mark. Then what we don't have is 100, so it becomes our numerator. What we have is 140 becomes your denominator, and then multiply by the given figure is 1,608. Then you calculate it as such, you see that you're going to get 1,200. So this is the cost price of the goods that were returned. So you're going to subtract 1,200 for the figure for cost of sales. So we go to the figure, the cost of sales that are given in the list of balances, which is here 6,715,700. We subtract 1,200. So we do the calculation in our answer section. So we are saying here cost of sales are in brackets. We have 6,715,700. Then we subtract your 1,200. And then the net figure that you are supposed to get there is 6,714,500. So remember, this is our cost of sales. We subtract them from our sales, put them in brackets to get our gross profit. So if you subtract there, you're going to get your 2,685,000, and then we've got 820. So this other for gross profit. Remember, when you get a positive figure here, it means it represents a gross profit. But if it's a gross loss, it means it will be a negative figure here. So other operating income, we have to list all the operating incomes that were given in the question. So we can just try to locate the where do we have the incomes. Obviously, we find our incomes under the nominal account section. So we go down looking for income. So you see that the first income that we are finding there is rent income, and it is an amount of 153,120. So having our rent income, we need to try to find out how can we calculate the rent income given the additional information. So you need to go to additional information, find if you've got any adjustment that is affecting rent income. If you don't have, you have to take our 1,520 as it is. But in this case, we have something that we have in the additional information. Remember, you would have gone this additional information before you start to answer the question. So you'll be knowing that there is an adjustment or rent income that is there. So we are here on H, and it reads rent income was received for 13 months to 31 March 2018. On 1 January 2018, the rent decreased by 8%. So basically, we are saying it was received to 31 March, and we know that our year is ending on end of February. So it means we have got 13 months that we received our rent income. So you need to subtract March, because March is outside our financial year. Remember, we have to record what belongs to the current financial period according to the matching principle. So our year is ending end of February. Then for March, it doesn't belong to this period, so we have to remove. So, but the rent income for March is inside the figure that we are given here, which is 153,120. So we have to remove it from here. So what we are saying is we have to formulate an equation there that can lead us to the answer. So remember, the rent is saying to have decreased on 1 January. So it means 1 January, February, and then for March again we received, so we've got 3 months after it decreased. So it means before it decreased, I remember we've got 13 months that we have. So before it decreased, it was 13 minus, we have 13 minus 3, which is our 10 months. We've got 10 months before it decreased. So let's just assume our rent. Let's assume the rent is, before it increased, it was X. Let's just say it's X. And then we try to work out with X so that we can be able to calculate the final figure for rent. So having done that now, we can say now, before it increased, it's 10 times X. It was X, so we say 10X. And then we add, after it increased, we've got 3 months here. So we've got 3 brackets. We know that when it decreased by 8%. So remember, before it decreased, it was 100%. Then it decreased by 8%. We subtract 8%, you're going to get your 92%. So after it's decreased, it was now 0.92, which is 92% as a decimal. If you divide this by 100, you get your 0.92. As a decimal is 0.92. So it means after it decreased, it was 0.92x. So you multiply by 3 months that we have there, then you get your 0.92x. And then you multiply it like that. You know that you now get the total rent for the that was received. So we go back to check that figure for the total rent that was received, which is here 153,120. So it's equal to 153,120. So this is what we have. So we can just try to work it out within that context. So here we've got 153. Right. So having done that now, we can now remove the bracket so that we can be able to find X. So we can say 10X plus, if we say 3 times 0.92, 3 times 0.92, you're going to get your 2.76. So it means here we have 2.76 x equal to 153,120. Obviously, if you add there, it becomes 12.76 x equal to 153,120. Then to make x the term of the formula there, we can just divide by 12.76 both sides. And then it remains as x is equals to. So we now say 53,120, and then we divide by 12.76. And then we are going to get your, and try to see what do we get there. If you say our 2.76, and then we make it the denominator there, and then we divide it into the figure that we got there. So if you divide correctly there, you're going to get your 12,000. So this was rent before it increased, but the rent that we want to subtract from the total rent is the rent for March. Of it, March it had already decreased. It had already decreased, so it was now 0.92. So we are now saying to find the rent for March, we are now saying rent for March now. Our rent for March now, we are saying 0.92 times 12,000. If you calculate as such, you see that the figure that you are going to get there, the figure that you get there, let's just try to calculate. You're going to get 11,040. So this is the figure that is for the rent which applies for March. So it's going to apply for January, February, March. Each month we are receiving 11,040. So we're going to subtract it. Remember, rent for March doesn't belong to the current financial period, so you have to reduce. So in other words, it's a prepayment of an income. Then we are able to reduce it. So we are just going to say the total figure that we are given in the list of balances, subtract 11,040. In other words, we are just saying 153,120 minus 11,040. So we go to our answer section. We come here, we are saying rent income. And we are saying on the calculation part, we are saying 153,120 and then we subtract 11,040. And then the net figure that we are going to get there is 142,080. So this is what we have. Then we can try to go back again to check on the next income that we have. Remember, we are looking for other incomes. So after rent income, we've got bed debts recovered. Bed debts recovered is also the income. We've got 3,860. 3,860. But before we add another 3,860, you need to go to additional information to check if you've got anything that is affecting on bed debts recovered. So if you come here, you'd see that let's try to see if we've got anything that is affecting our bed debts covered. We can go down checking for that figure of bed debts are recovered. So see that we don't have anything. So if you don't have anything in the additional information, you have to come back and check the figure that you are given there and transfer it as it is, which is 3,860. So we go there. We've got our bed debts recovered, and we're saying it's 3,860. And then obviously we try to check again in other income that we have after bed debts recovered. So we can just try to go down. We see that we have got interest on fixed deposits is an income, but it's supposed to be adjusted after operating profit. Remember, we are supposed to add interest income, and interest on fixed deposits is part of interest income. Then interest on loan is an expense, we leave it. Interest on current account is part of interest income. So we add it to interest on fixed deposits. So we skip that one. And then we have the issue of trading stock surplus. When we have a trading stock surplus, it has to come under other income. So you have to check in the question before you leave the other income section whether you have a trading stock surplus, because it's something that you can identify when you finished preparing. So for you to avoid that mistake, you have to check before you leave the other income section whether you've got a trading stock surplus in the question. So formula for calculating trading stock surplus or deficits is you are going to say your book value. So let's just say trading. This is trading stock surplus or deficit. So the formula that you're going to use is the book value of the trading stock minus the physical stock count of the trading stock. So if you have got a book value that you get a positive figure here, it means it's a deficit. If it's a negative, it means it's a surplus. So this is how we are going to identify whether you've got a deficit or surplus. So if you've got a surplus, you have to put it under the income. Other income. If it's a deficit, you put it under operating expenses, because it would be an expense. So our book value is the figure that we are given in the list of balances. There, we it in the trial balance. If you are given it in the form of the trial balance, it will be given in the trial balance. So we've got 1,534,000. That is our book value. But we check for in the additional information, you have got anything that is affecting this book value. So anything that is mentioned about trading stock, there is going to affect our book value. So if you come here, on the first item, we have got our credit note there. So these are returns. Obviously, when they are returns, these goods are going to come back in the they are going to come back in the stock. They are being retained by data, so they are taken back into stock. So they are going to increase the book value of our stock. So we have got we calculated this and we got 1,200 by saying we said 100 over 140 times 1,680, and then we got this 1,200. So this one is our cost price, because when they are retained in the stock, they are going to go at cost price. So it means the book value that we have there, we have to add to 1,200. We have to add our 1,200. So but if you go down there, we have got another adjustment that is affecting our book value. We have got this D, 18,000 worth of stock which was stolen. So it means we are going to reduce our closing stock by 18,000 because we have got 18,000 stock which was stolen. So we go there. And adjust it. So it means we are going to subtract 18,000 and add 1,200 to get our book value. So we are coming here. We are saying the figure for a trading stock that we have is 1,534 here, 1,534,000. So we are saying calculate our book value. So we are saying 1,534,000 minus 18,000 which was stolen plus 1,200 which was retained. Then we get our book value. Then we subtract the physical stock configure. The physical stock configure you'll be given within the additional information. So we check where we are given the closing stock figures after physical stock count. So this is the figure that we have stock on hand as per a physical count on 28 February 2018, which is at the end of the period. Trading stock, we check only the figure for trading stock, which is 1,519,800. 1,519,800. So we subtract 1,519,800. So we calculated it as such. So let's just try to maybe first calculate this bracket and see what we get there. So if you say 1,534,000, and then we subtract your 18,000, and then we add your 1,200, we're going to get your 1,517,200, and then we subtract 1,590,800 and see what we get there. Then we subtract your 1,519,800. And you're going to get a negative 2,600. So since we are having a negative here, it means it's going to present as a surplus. So we are just going to summarize the working, whereby we are saying 1,517,200 minus 1,519,800. So we come here and we are saying trading stock surplus, trading stock surplus. So basically on the working part, we are saying 1,517,200. Here we can just say 1,517,200, and then we subtract your 1,519,800. 1,519,800. So we calculated as such. So we know that we got an answer of 2,600. So here we are saying our trading stock surplus is 2,600. So this is what we have. So you'll see that this marks the end of our other incomes that we have in the question. So we can add the 142,080 plus 3,860 plus 2,600. And then the total for other operating income now becomes 148,540. And remember, we are supposed to say gross profit for plus other operating income, and then you get your gross income, of which your gross income is given there. Gross income is given there. So we can just try to just put the figure here as our gross income. So if we add the gross income figure that we are supposed to get the year is 2,834,360. And then we go to other operating expenses. We are supposed to list them beneath here. Then the total figure for other operating expenses comes here. So we are going to pick them from the list of balances that we are given there. So we can go there and go item by item and try to see terms of what are figures that are supposed to come under other operating expenses. So we are here, and we start from here going down, stating for those ones. We have got our salaries and wages as our first expense, and it has got 926,687. So before you take this figure to the income statement, you need to check in the additional information if you've got anything that is affecting our salaries and wages. So if you go down item by item, trying to see if we have got anything that is affecting our salaries and wages, to see that we have nothing. So if you have nothing, you take your figure as it is, which is 926,687, and transfer it to the income statement under operating expenses. So here we are saying our salaries and wages. And the figure that we have for salaries and wages is called salaries and employers' contribution according to the explanation that we are given there. It's salaries and employers' contribution. The employers' contributions, and the total figure that we are given is 926,687. Then we go and check again in other expense that we have in the question. So after salaries and wages, we've got consumable stores. So consumable stores is the figure that we are given here. It represents consumable stores that was purchased, that was bought. So the figure for consumable stores that we need to put in the income statement as an expense is the consumable stores that was used. So we can only be able to find consumable stores that was used by saying what was bought minus what is remaining at the end of the period. So what is remaining at the end of the period, we get the figure in the additional information there. We check if you've got anything that is remaining at the end of the period. So we see that we've got here stock on index physical count on 28 February 2018, we've got 1,340, which means indicates what was remaining at the end of the period. So we're going to subtract this figure from the one that was bought, which were given here in the list of balances. So the one that was bought is 18,600. So we subtract there and then get the net figure, which represents what was used, which is the expense. So here we are now saying consumable stores. Consumable stores. So in brackets, we are saying what was bought is 13,600. Subtract what was remaining at the end of the period, which is 1,340. Then we get your net figure, which is 12,260, which is representing what was used, which is the expense. So we leave it like that, and then we go to the next expense that we are given in the question. From consumable source, we've got sundry expenses, which is 123,400. And then before we take this figure to the income statement, we go again, additional information to try to see if we've got anything to do with sundry expenses. You can just try to go item by item, but if you go to G, advertising is included as part of sundry expenses account. An amount of 12,000 rands has been paid for period 1 January 2018 to 31 March 2018. So we've got an amount of 12,000 rands that is for advertising, which is inside our sundry expenses. So we need to adjust it. So remember, our year is ending 29 February. Is 29 February 2018. 29 February. That's where our year is ending. But this advertising figure is from 1 January to 31 March, which means the figure for March, we have to remove it because it's not for this period. So for us to find the figure for March, we need to find how many months are there between 1 January and 31 March. We've got January, February, March. So we have got 3 months. So we are going to divide our 12,000 to get the monthly payment. 12,000 divided by 3. And obviously, we are going to get your 4,000. So getting your 4,000, it means it also applies for the March that we want to subtract. So we are going to subtract 4,000 from the total for sundry expenses that we are given there. So we go there and say this figure for sundry expenses that we are given here, it's 120,400. Then you subtract your 4,000. Then you come here. So we are saying sundry. So in brackets, we are saying 123,400. Then we subtract your 4,000. And then the answer that we are supposed to get is 119,400. Then we can as well go to see on the next expense that we are given. So after sundry expenses, if you go down with the expenses that we are having there, we've got water and electricity here, which is 150,330. So we need also to go to Excel information to see if we've got anything that is affecting our water and electricity. Let's try to see, but if you come to F, it means a further 12,600 rands is owed for water and electricity. So whenever we have an owing or an accrual, we have to add. For that 12,600, we come here. We are supposed to add it to the figure for water and electricity that we are having here, which is 150,330. So we come here. We have water and electricity. And then for water and electricity, the figure that we have there is can just maybe cross check in terms of the figure that we are having in the list of balances, but the figure that we are having there is 150,330. And then remember, we've got something that is owing, which is 12,600 that we need to add. And then we get the total figure of 162,930. So this is what we have. Then we go to the next expense that is listed there, try to see what do we have. So after water and electricity, we've got bad debts, and the bad debts we've got 12,100. But obviously, we need to check if we've got further bad debts that are there in the additional information. So, but if you come to B, a debtor who owed 1,900 rands has been declared insolvent. His estate paid 30 cents in the rand. 30 cents in the rand. This amount was received and recorded right off the balance. So if 30 cents was paid and 30 cents is a decimal, it's 0.3. It means what was not paid is going to be 1 minus 0.3, which is 0.7. So 0.7 was not paid. So if you say 0.7 times 1,800 now, 0.7 times 1,800, you are going to get the amount that was not not paid. It was going to be written off. So we calculated this that now and try to see what actually do we get there. I will say 0.7 multiplied by 1,800. And we are going to get your 1,260. So this represents a further bad debt that needs to be added to the figure that we are having in the list of balances. So add it to we add it to the figure for bad debt that we have here, 12,100. So we go to our answer section. So we are saying bad debts. So in brackets, we just summarize the working method. We are saying 2,100 plus 1,260. And then the figure that we get there is 13,360. Then after that, now we go again, return information, try to see if we've got anything more to add as our expense. Right, we've got interest on fixed deposit, we said this interest income adjusted after operating profit, and then we go to interest on loan, it's an interest expense adjusted again after operating profit. Then interest on current account, we said it's part of our interest on fixed deposit, so they are added to get the total of our interest income. So having done that, we can go to additional information to find for other expenses that are not mentioned in the list of balances. Obviously, in that case, you have to go again item by item, try to identify other expenses that will not be listed in the list of balance. So if you come to item 3, adjust the provision for bad debts to 5% of book debts. Adjust the provision for bad debts to 5% of book debts. So remember, provision for bad debts, we calculate the level of provision for bad debts for the current period, and then we compare that level to the level that was there last year to identify if there was an increase or a decrease. So if there was a decrease, it means it's an income. We're supposed to put it under other income, but in this case, it's going to be an increase. If it's an increase, it's to be an expense that you are supposed to put under operating expenses. So in this case, we want to see now the level of debtors that we have in the current period, which is given in the list of balances. We are given it as debtors control figure, which is 280,200. So we take that figure, 280,200. Maybe we can just try to create some space here. So we are saying the figure that we are using is 280,200. So this is the level of provision for so the level of debtors that we have for the current period. So this is the one that we are going to start from to calculate the net balance of debtors control that we need to calculate with 5%. So we go through all its information to see if we've got any adjustment that is going to affect this level of our debtors. So if you go to we go to item A credit note for 1,680 issued to a debtor on 26 February was inadvertently omitted from the relevant journal. So it means our 1,680 was supposed to reduce this 280,200, but it was omitted, so we're going to subtract it from there. Remember, these are returns or debtors allowances that are going to reduce the amount that the debtor is owing. So we have got 1,680 which needs to be subtracted. And then if you come here, they are saying a debtor who owes 1,100 has been declared insolvent. His estate paid 30 cents in the rand. This amount was received and recorded right off the balance. So the balance that we are going to write off is going to be 0.7 times 1,800, which we calculated there, and we got the figure that we got there was 1,260. So here we are supposed also to subtract 1,260, which was not taken into account. So we can now calculate it from that now and see what the net figure that we're going to get for the debtors control. So if you say 280,200, and then we subtract 1,608, and then you subtract 1,260, you're going to get your 277,260. So this is the figure that we are getting there. So having now our net level of debtors control figure for the current period, which is this one, we are now saying 5% of that amount, which is now 5 over 100 is 5%, and then we multiply by 277,260. So with that now, you are going to get an amount of 13,863. So remember, we want to identify the movement in terms of this level of provision to identify if it increased or decreased. So this is the current level of provision for bad debts. So the previous level that we want to compare with is given in the list of balances as the level of provision for bad debts for the previous period. So we come back here and try to check that provision that we're given in the list of balances, and to see that we'll be given it under the balance sheet section here, where they are now selling us as provision for bad debts 1 March 2017, 11,000. So this one was for the previous period. So we come here, we take that figure as 11,000, is 11,000 and C. So we are saying 11,000 was for the previous period. This is our 11,000. So it's a movement from 11,000 to 13,863. And you see that this is an increase. And if it's an increase, it's an expense. It has to go under operating expense. But if it was a decrease, it was supposed to go under other operating income. So it's something that you also have to check before you leave the other operating income section, so that if it's an income, you quickly, if it's a decrease, it's the income, so you quickly have to put it under income. So with this case now, we can now be able to find the size or the difference that is there, so that you can see the amount of the increase. So you're now saying 13,863 minus 11,000. And then we get your increase, which is 2,863. So this is the expense that we going to put under operating expenses. So we go there and then just summarize the way final calculation that has led us to the answer, which is obviously this one. We go there. So I believe that now we are saying provision for bad debts. And then we are saying 30,863 minus 11,000. And we got 2,863. So we go there again, try to identify other expenses that are in the external information not listed in the list of balances. We come here and try to see other expenses. We go down. So if you come here, you'll see that we've got 18,000 worth of stock which was stolen in burglary, and then the insurance policy is in excess of 2,000, which is payable by the business. So this 2,000 needs to be payable by the business. So this is the loss that we've suffered as a business. So this is the loss due to theft. This amount that is being paid by the business becomes the loss, and it's an expense. So we have to take out 2,000 and then to get our 2,000, maybe you can just summarize the working by saying to get our 2,000, we're going to say 18,000 minus what was paid, which is 16,000. 18 minus 16 to get to 2,000. So come here. So now we are saying a loss due to theft. 2,000. So remember, this figure is given as calculated figure. So that's the figure that we have, 2,000. Then we go and check again to try to see until we go to the end of our additional information, so that we can see if we have exhausted every expense that needs to be included. So if you go down, you'd see that we have also J, which is saying depreciation for the year ended 20th February 2018 was 194,574. So we're going to, this is already calculated figure for depreciation. So we're going to take it as it is and go it and put it under as depreciation. So here we are saying depreciation. And the figure that we are given there, it's 194,574. All right, so this is what we have, and then we try to go, we see that depreciation was the last item that we are having there. So we can now add our total to get our total for operating expenses. So we are adding everything that we have in the from here to here, which is this is the last figure, and then we add total comes here. So if you add correctly, you're going to see that the total that you are supposed to get there it's supposed to be 2 million, sorry, 2 million. You've got 2,836,000, 760. So this is the figure that we have. So obviously these are operating expenses, so we're supposed to subtract. So we are now saying 2 million we are now saying 2 million to get the operating profit. We are saying your gross income minus your other operating expenses, where we are saying 2,834, 2 million. Let's just try to see our gross income we are getting. The figure for operating expenses is wrong here. There we can just maybe try to correct it. The figure for operating expenses is a wrong figure there. So we can just maybe try to remove it so that we put a corrected figure there. So let's just try to see, and then we remove this figure. But let's try to remove this figure. So if you add the total of the operating expenses, let's try to add it correctly. The figure that we're supposed to get here is 1,434,074. And obviously we are saying we subtract it from the figure for gross income. Then you subtract correctly, you're supposed to get your operating profit. So if you subtract there, the correct figure that we are supposed to get for operating profit now becomes, let's try to see, it becomes, let's maybe try to calculate it so that we get a corrected figure there. 2,834,360, and then you subtract your 1,434,074. You're going to get 14 million. You're going to get 1,400,286. So here we have got 1 million. Remember, it's a positive figure that we're getting, so it's a operating profit. So if it's a negative, it becomes operating loss. So this is what we have. Then on interest income, we are supposed to take the figures that we are having there for interest and fixed deposit and add to get the total for interest income. So on interest income, we are going to have components of interest income that we have in this question. We've got interest on fixed deposit is part of interest income. Also, interest on current account is part of our interest income. So what we are going to do is we are going to look at interest on fixed deposit. And the figure that we are given for interest on fixed deposit at 27,000 represents interest on fixed deposit that was received for the current period. But it doesn't mean it's the amount that is supposed to go to the income statement. We need the amount that was supposed to be received. And what was supposed to be received, we can calculate it from the figure that we have for fixed deposit that we are given there at the balance sheet section, where we are having 8.5% per annum. So it's going to be 8.5% of 520,000. So if you say 8.5 of 520,000, we get the, or 520,000, we get the interest on fixed deposit for the period, which is supposed to be for this period. Then we can compare with what was paid, then to see if we pay, to see if we received more than what we're supposed to receive, or we received less than what we're supposed to receive. But the figure that we get here, when you calculate here, is the actual figure that is supposed to go to the income statement as interest income. But before you calculate it, you need to see if there's any adjustment that is going to affect the final balance that we have here, 520. So if you come here, you'd see we've got something that is mentioning about fixed deposit. So I is saying outstanding interest on fixed deposit must be taken into account. So you need to which means there is an owing of interest on fixed deposit, which is an outstanding interest on fixed deposit that we need to calculate and find out. But we are given that a further fixed deposit of 60,000 was invested on 1 August 2017. This was properly recorded. Interest on fixed deposit is not capitalized. So if they say it was properly recorded, which means this 60,000 is inside the figure that we are given in the list of balance for fixed deposit. So in other words, we are saying 60,000 that we are saying using here is inside this figure, there's a 60,000 that is inside here. But this 60,000 came during the year. It's not for 12 months. So you need to remove it there so that we are left with fixed deposit that was there for the whole year. So to get the amount that was there for the whole year, we are going to say 520,000 minus 60,000. So you can just maybe put it here by saying 520,000 minus 60,000. Then we get the amount that was there for the whole year. So we are going to say 520,000 minus 60,000, and then we get to 460,000. So we have 460,000. So this indicates the amount of fixed deposit that was there for 12 months. Then this 60,000 was partly there. So we can be able now to calculate the interest on fixed deposit for the one that was there for the whole year by using 8.5%, whereby you're saying 8.5 over 100 times 460,000. And we are saying this was for the whole year, which was for 12 months, so it's times 12 over 12, which is 1. And then we get, let's try to see what we get. 460,000. And then we are going to get your 39,100. So this is the interest on fixed deposit for the fixed deposit that were there for the whole year. So we also have to calculate for the one that came during the 60,000. But first, we have to try to find out how many months was this fixed deposit there. Remember, it was invested on 1 August 2017. So the whole of August, September, October, November, December, January, February, in the year ended. So we've got 1, 2, 3, 4, 5, 6, 7. So it was there for 7 months. So we are going to calculate, then we say times 7 over 12, which is 12 months in a year. Our percentage is 8.5, so we say 8.5 is 8 over 100 times 60,000 times 7 over 12. And then we calculate it as such and try to see what we get there. In other words, we are saying 0.085, and then we multiply by 60,000. And then the other that we get, obviously, make a proportion of 7 over 12. And then you are going to get your, if you calculate it, you're going to get your 2,975. So in this case, if you add this one plus this one, you get the total interest on fixed deposit for the year, which is now 39,100. 39,100 plus, let's just try to see the amount that we get there. So if you add the two interest on fixed deposit that we have there, for the one that was there for the whole year plus the one that was there for 7 months, we add the two, we get your 42,075. So this represents the total interest on fixed deposit for the year. Then you compare it with what was actually received, which is here. This is the amount that was actually received, which is 27,000. So we come here, we say now 42,075 minus 27,000. And then the answer that we are going to get there, let's try to see. We're going to get 15,075. So this 15,075 is the amount that is still to be received, but the total is supposed to be 42,075. Then if you go back to the statement that we have there, it's saying a further deposit was invested, outstanding interest on fixed deposit must be taken into account. When we have such a statement, it means we have to show the outstanding one in our final calculation in the income statement. In other words, we are saying when we're putting our final calculation, we should show that there's 15,075, which is yet to be received. So we are going to say 27,000, what was received, plus what is yet to be received, 15,075. Then you get your total, which is 42,775. So this is how we are going to present it now in the income statement as our final calculation, because we want to show the outstanding one. that has been emphasized in the additional information. And then, but a part of this interest income also, we have interest on current account, which is this one, which is 9,300. So we also have to add it there, and we add 9,300 to get the total now for interest income. So this is the final calculation that is going to the income statement. So we go there. So we are saying interest income, and then in brackets, we are going to say interest income in brackets, we are going to say 9,300 is the one that was for current accounts, and then we add 27,000 representing what was actually received, plus what is yet to be received, is 15,075. So the issue is we wanted to show this figure as an outstanding one, outstanding interest income. So the total that we are supposed to get there is 51,375. And then we add the two, which is, we are now saying 1,400,286. 1,400,286, and then you add your 51,375, and you're going to get your 1,451,561. And then interest expense, we go and check again. We've got interest expense in our question. Right, we try to check if you are given the figure for interest expense. We can maybe try to go to additional information to see if we've got that figure. But if you come to a list of balances, we see that we've got interest expense here, which is interest on loan, 8,030. So we can take it as it is. Depending if we had something in additional information that is explaining about interest on loan, we are supposed to first make the adjustment so that we can get the final answer. But if you come back here in the additional information, you'll see that we are not having anything that is explaining to us about interest income. If you go through everything, we don't have anything to do with interest income. So this is what we have. So and again, if you come here, other balance sheet section, we don't have a loan that we can use as the basis of the calculation of interest income, of interest expense. So that's why we are taking the figure as it is, which is 6,030, and put it as a interest expense. So we come here for interest expense, we have got 30,030. And we are saying we are subtracting here, get the final answer now for net profit for day. Now we are saying minus 30,030. In other words, we are saying 1,451,561 minus 10,030. And then you are going to get your 1,421,531. So this is the final answer for net profit for the year. So this marks the end of our question on income statement. So this question, let's not forget, it has got 48 marks. So hopefully this video was helpful. Let's subscribe and share. Let's share the link to our colleagues who are doing grade 11 accounting. Let's turn off the notification button so that we get notified of new uploads that are going to come. As for this video, I'm signing out. We'll meet again in the next video.